markets, along with the overall strength of the correlated sell-off, albeit we do have some pockets in the market that are still either holding or ultimately not seeing the same downside volatility as the S&P or the NASDAQ 100. So, as every week, we often want to refer to what I like to use as an expectation of volatility or an expectation of movement for the week ahead. Now, last week, we had our S&P index predicting approximately a 154.2 expected move on the week. And this was coming after a holiday Friday session where not only did we breach the downside of the expected move on that following or that prior week, but the market was advertising that going forward for the week ahead, the range expansion expectation was elevated. We were seeing approximately 50 to 60 point expected moves prior to last week. And then while the market gave us about 154 point expected move, we actually did not achieve all of that volatility. Amidst the week, while things seemed fairly dire in both directions, the market actually was a bit efficient, as we did not breach or even test the lower bound of the expected move. Now, the question remains, is this volatility over? And are we looking at a market that is trying to bottom out? Or is the market still in a state of uncertainty and leaving things sort of as is? So one way you can do that is to look ahead and ultimately see, has volatility come off? Are we seeing a reduction in volatility? And ultimately, is this reduction leading to price stabilization, maybe some slight value appreciation or move into some of our previous upper ranges, and ultimately just a calming of the market? And short term, the answer is yes and no. While we are going into this week with approximately the same range of expected move, you can see here I have it marked at about 157 points. We're looking at a market that is predicting this ultimate range as the S&P's basically trading range for the week. And while we did come from a previous week that did not achieve all of that volatility, looking at other products, you can see that things are still in a bit of an elevated state. So as we like to refer to, our VIX remains near approximately that 30 print. And remember, the VIX is only showing us 30-day volatility in the S&P. So if I go back to our SPX, I go into something like the option tab, and I look down at the 30-day volatility, you can see in the Jan 3 and 7, we're looking at these IV rankings. I think I marked, no, I missed it by one. So all the VIX is doing is taking these values, approximately 30 days out in time, and advertising them in the form of a chart. Along with the advertisement, you can use that product for hedging, and that's ultimately been discussed in previous engineering the market sessions. But ultimately, the market still sees a lot of short-term risk inside of the next month, approximately. Now, whenever we talk about risk, we talk about volatility, and we talk about this idea of expanding range. It simply means that the uncertainty in the market is causing a lot of shorter term oscillations and movements of capital into different products. Now, one way to interpret this type of volatility Depending on your level as a trader, you may be looking at something like VIX futures or volatility futures for short. So inside of the past couple of weeks, we've seen a rise in our active contract for VX. And while this seems fairly nominal, given that the market has been seeing a correction, we've seen lots of products expanding their implied volatility. One thing that's more interesting to me is the term structure behind this particular product. Now, normally, just like in most futures products, you would expect the shorter term active contracts to be trading at a bit of a lower premium than longer dated contracts. Essentially, just like the option market, you expect to be paying additional premium for additional time exposure. And usually that time risk is often perceived in the price of your derivative product. So for example, with our futures contracts here, you can see a breakdown of, let's see if I can expand this, I can't. You can see a breakdown of different contracts, ultimately just looking at the ones with volume. And this, of course, goes out in time into things like January and February, March and April, with each of these having their own sort of day to expiration. Now, what makes this interesting, what makes this structure interesting is last week, we talked briefly about the idea of normal term structure being in a state of what's often referred to as contango. This just simply means that the forward month or the shorter dated contracts are going to be trading at a lower premium than the future dated contracts, basically elevating or showing that rise in the term structure out in time. But whenever things start to shift in different products, and it doesn't really matter what market you're looking at, it could be crude, it could be natural gas, it could be gold, whatever futures products you really want to look at. Inside of this volatility product, we did see a change in that structure last week. Now, this change was marked by something like our active contract, which right now is trading as about 27.90. This actually inverted or flipped the next series or the next available contract that has trading volume and became relatively more expensive, essentially changing the structure from flat into inverted and going from a state of contango into backwardation. Now, right now, you might be saying, okay, well, 5 cents off, that's really not too bad. It's essentially flat at this moment, and that is true. But last week, we actually saw the height of that volatility inside of this futures product, where the active contracts were trading above 30 and the next series were trading around 28 to 29 at different periods in time. So we were seeing things like $1 to $2 disparity between active and next month, which is a pretty significant deal. It's a big change in how the market is perceiving that risk, and ultimately the pricing of it can be interpreted through something like the futures products. So in the past, whenever we see these large inversions, they often can mark significant lows inside of what has been a dominant bullish uptrend over the past year. In fact, if we look back at our SPY, we often can see shorter term corrections with that term structure starting to flatten. These are often marked by things like volatility spikes inside of the VIX, something like a leverage ETF or ETN that uses future contracts will see 1 to 2 day volatility to the upside as the market is basically addressing that short-term correction in the form of different hedging activity. But overall, if we look at the SPY as it is now, and we interpret from a technical sense, the type of trading volume that we've been experiencing over the past 4 sessions, it's been worth mentioning that this is not only elevated, but also looking more and more like significant lows back in time. We're seeing that sort of selling volume hitting at or near relative selling climaxes in the previous uptrend of this market. So the question remains, are we starting to see the bottom form in this market? And albeit, what can we do to look for the possible turnaround that may be about to be set up? One thing I like to do is start with that sort of high-level interpretation. Ultimately, the volatility is dictating the type of range that we're trading in. And that simply means that instead of trying to exactly nail where the bottom of this correction is going to land, I might want to go out there with something with a bit more looseness inside of its strategy. Maybe a larger than average stop loss, which is something we talked about last week, basically loosening your risk restrictions and trading smaller. If you're an options trader, you're loving this environment, albeit maybe your strategies are starting to change, as being an income premium seller might be advantageous in the short term, and using some of that to buy longer dated, possibly more directionally exposed type of spreads. Something as simple as a calendar or a diagonal, depending on your risk to reward and sort of your risk tolerance. We also even looked at the idea of just going into the option market and using credit or debit spreads to reduce your volatility risk as a whole. And for a lot of option traders, even those who've been trading for a while, this concept may still be quite elusive. So the simple way to view it is to go into an option chain, maybe narrow this down, and simply look at how options are priced relative to the respective Greek fundamentals or the Greek components of the option model. So when we're looking at things like directional plays, no matter if you are bullish or bearish, you're ultimately going to be taking on a bit of volatility risk. Now, if you get the direction right and the volatility expands, that's sort of a best case scenario for people who are directly debit buyers of calls and puts. And ultimately, being in the right position, being at the right strikes, using the right time frame, all these components still come into play for your profitability. But the idea of being net delta exposed, which is going to be true if you're buying calls and puts, and then ultimately, no matter which side of the option chain you are on, you're going to have a bit of volatility risk. So if, for example, we have started to form a bit of a bottom in this market, then even if you go out there and buy something like directional calls in this market, one thing that could happen is the volatility of this market will start to reduce. Essentially, if that bottom is formed and that term structure basically signaled the end of the downside pressure we've been seeing, you may get the direction right. You may essentially catch the low of a market by buying something like a direct call. But the issue arises if the volatility reduces and puts pressure on your directional exposure. So, for example, if you were out in this series and you went ahead and bought something like a 455 SPY call, you're basically getting about 0.5 delta exposure to your portfolio to the upside. For every 1 point the SPY moves higher, you should see approximately 50 cents or 50 delta of appreciation. The issue, however, is if this number or the volatility, the implied volatility of this series also comes down, and let's say this number goes down by 2%. Now we're seeing about a 32% IV, which is still a bit elevated, but can be reduced very quickly. Well, now your Vega exposure, which right now is sitting at about 0.29, will also provide weakness inside of your call strategy. You will essentially lose about 0.58 of Vega exposure, negating the upside potential of a dollar move inside of the SPY. So you're essentially looking at a market that it may be about to hit a low, but with the volatility that's been propagated throughout this market, you want to be careful with your strategies, because even if you get the direction right, you may still find the profitability of your strategy a bit lacking. And that's one way that spreads, or in this case, verticals, can protect yourself from that possible volatility reduction. That's true across any time frame, any environment, but ultimately now with volatility elevated, you want to be especially careful with the types of strategies you're using. So for example, instead of just buying this 455 call, which gives you that volatility risk, you can go out and say buy or sell, a 460 call, essentially reducing and negating any volatility exposure. Because while you are positive Vega in your purchased call, you are negative Vega in your sold call, and these values essentially negate each other out. You still get that long exposure. You're still taking a defined risk strategy, which has been the key from last week's examples. But you also provide yourself a little bit of protection in the case of a directional move, but a volatility crush. So one thing to kind of just cap the idea of this volatility in the market. Ultimately, last week, there were a lot of correlated days, both to the upside and the downside. And oftentimes people misinterpret that sort of market day and that sort of move throughout the market because they see it as relative strength and relative weakness. While it's true that those days are very challenging to look for reversals, because ultimately you're fighting the entire marketplace in one direction, the underlying dynamics of why that's happening are a bit more complex. If you think about how the volatility has been sort of the main risk in the past week, and how things like our VIX are advertising how exposed possible firms are to negative volatility, you can really see that the market environment shifted around whatever occurred back during the initial spike of this VIX, approximately the day after our holiday session. Now, whenever firms are out there buying and selling option contracts, this is simply one portion of what they do. These are market making firms. We as retail clients buy, for the most part buy, but sometimes sell option contracts simply as trading vehicles. And someone has to be out there selling you those contracts. Once again, no matter which side of the chain you are on, if you are a retail client and you're going out there buying calls, buying puts, basically taking those directional bets day in and day out, firms are taking on Vega exposure. It's the same basic concept behind things like gamma exposure or that sort of delta risk that we discussed in previous sessions. People buy calls. Firms ultimately do not want to be delta positive, so they will hedge that risk by buying the underlying shares. And If you are Vega exposed, i.e., if you are a firm and you are selling lots of option contracts, therefore having a heavily negative volatility exposure, one way to hedge that type of risk is to use ES contracts, especially in the likes of the SPY and the SPX. You can essentially negate your Vega exposure by either buying or selling ES contracts to mitigate that overall risk to a large institution's portfolio. Now, this dynamic gets a little bit more complex and more in depth depending on changes in relative volatility. But essentially, if the market has a very heavy negative volatility or negative Vega exposure, and those firms wish to essentially hedge as volatility continues to climb, one thing they can do is sell ES contracts, or basically sell the S&P as a whole. And this is kind of one of the things that we often see as a consequence of volatility spikes. We often see that the market will have volatility increases during corrections or larger than average sell-offs, deeper sell-offs, or simply quicker sell-offs, as opposed to more nominal or just calm pullbacks in an underlying product. And ultimately, the inversion of volatility futures last week may be signaling a short-term bottom that the market is trying to defend. However, as with everything, there's sort of this if-then scenario driving our thesis for the next week. Obviously, we have our S&P expected move. We've marked that as approximately 157 points to the upside or downside from last Friday's close. That brings us to 43.80 and 46.95, with the understanding that last week we had a similar move priced in, but the market didn't even achieve that entire move. So amidst all that volatility, we were actually a bit efficient. If, for example, we continue to see risk in this market, continued selling, a possible breach of this sort of false breakdown look that we have near our 450 print, this is sort of the level or the defense area that the market deems more important than any previous level we have marked. If any of these things start to break down, be thinking about the more alternative cases in this market. Be thinking about things like gamma risk. The thing about gamma exposure in this market is it kind of cuts both ways. The market can have large downside gamma exposure. I'll show an example of what that might look like. Something in the 17 Decembers. We pull up open interest and we look down to platform's kind of stalling out there. We look down to some of these, I would call them psychological price levels, something like a 4,000 inside of the SPX. Be thinking about how the market is drawn to value, to specific price levels that have high inventory. And essentially, the stage is set for these types of gamma risk opportunities to hit the market, depending on how we trade over the next couple of weeks. Essentially, be prepared for the worst case scenario. If you are sort of that perma bull inside of what has been a great overall bullish market for the past year, be thinking about short term, the type of volatility we can see prior to something like an end of year sort of rally or ultimately reassessment of how we're going to close this year. Also be thinking about your type of hedging strategies, or basically just playing the market in the direction of the momentum during this period of time. It's okay to be that perma bull longer term. It's okay to even think more bullish strategies, as it might ultimately be your edge. But be flexible in the short term, using profitability from things like short directional plays or even some volatility plays in the case of option market strategies, to allow for your portfolio to grow and ultimately be protected during a time of elevated risk. It is worth mentioning that we are still in a market with a lot of risk signals flashing in our faces. We have the dollar still in a bit of an elevated position. We're going to look to see if the dollar can break down this week. Our main thesis here being some sort of distributive move, and we're looking for the dollar to basically break this key trend line. We're also looking to see where strength is performing in this market. I went ahead and mentioned that last week, amidst all of this selling pressure, only sector that actually closed the week green was utilities. So yes, it's not necessarily the sexiest sector out there, nor is it a sector that's going to hold up the market as a whole. But if you are looking for where money flow has been the past week, look no further than the outperforming sector from last week's overall volatility, and that has been utilities. You can also sort of see where is the most extreme downside risk. That has been sort of focused inside of XLC, seeing another 3% decline last week. Got the 1 week period listed here. And of course, seeing that same elevated volume, but this is a market that may be about to hit a relative low, ultimately seeing maybe more investing or sort of that longer term perspective as things are overcorrecting in certain areas. And then finally, this is a market that has a lot of high correlation across the board. As we talked last week, the crypto market was sort of on that edge of possibly seeing the volatility from the equities side. And while the equities market closed, the crypto market is of course open 24/7 and gave us a flash sort of crash. We saw a lot of liquidation breaks inside of Bitcoin and other highly correlated crypto products. That, of course, can change both the short-term perspective on the market, along with provide some possible longer-term opportunity, depending on where your strategies focus. So this volatility is taking a lot of things into consideration. Know what your risk profile looks like. That's always going to be true, no matter what the market is throwing at us. And as day traders, take advantage of this short-term volatility. We'll kind of see how it starts to reduce or ultimately inflect over the next week or so. So with that said, my name is Jared. This is all my time. Trade safe out there. We'll talk a bit more tomorrow, maybe go a bit more in depth into some of these concepts, and ultimately dive a little deeper into some key areas to keep on watch this week. So stay tuned for pre-market prep, and we'll talk more then.
All right. Good morning, everyone. Welcome to Pre-Market Prep. I hope everyone's having an amazing morning. Hope you guys had an incredible weekend. Good morning, Norm. How you doing, my friend?
Good morning, brother. I'm doing well. I finally got a good night's sleep. I am going to have to, I told you I have that sex tape of you. You keep leaving this hot mic on for YouTube and they can hear me cursing and stuff.
Oh
I'm
man.
going to have to release it because,
Yes, yes.
you know, you
Absolutely, man. Oh, I had no idea your mic was hot this morning. Yeah, I'm sure it wasn't anything too bad.
just a couple of F bombs, I think.
Not a better way to start our Monday morning, get everybody fired up there. So I
How are you
think
doing,
you
brother?
I think you did all right. Doing good, man. Norm, I know you guys had an amazing weekend. Just give a quick tidbit of, how was it, the meetup, meeting, going to the
Yeah.
office and everything.
It was great, man. We missed you there for sure, and the other guys that couldn't make it for one reason or another. We had an outstanding meetup on Friday. Mike and I got there Wednesday, had meetings with Andrew and stuff, and just kind of scheduling out what we're planning on doing over the next 12 months and how we can improve BBT and everything else. So exciting stuff there. No news I can really no news I can really release at this time, but I think some great little tweaks and changes to BBT as we move into 2022. Our like I said, the meetup on Friday was fantastic. I'm guessing 130 to 150 members there. Got to
Nice.
spend a lot of good time with them, and then a number of them went to the EDM event with us afterward. Yeah, so it was great. I'm glad to be home though.
Yes, yes. Sounds like an epic event and meetup. So glad you guys really enjoyed it. All right, guys, let's get to it this morning.
There's a picture
Yeah.
Mark just threw up. Met Mark and a lot of other great members there. So these,
Yeah, here's that picture, guys. Again, you can tell what an amazing group there. Love it, guys. So it looks like it was a whole lot of fun. Um, all right, excellent. I'm sure there'll be more pictures coming out soon on today, tomorrow. So be on the lookout for that. Make sure you follow Norm at Norm. Is it underscore or it's just Norm BBT?
Norm BBT on
Yeah,
Twitter.
at Norm BBT and at Bear Boot Traders, not Bear and at Bear Boot Traders. Keep track of those. Here's our gappers list this morning, guys. Got a little bit in the green, some stuff in the red. Actually, a lot of stuff in the red. Some here double digits leading the way. Looks like some Bitcoin stuff is not doing too well this morning. A lot of it.
Nope.
Uh,
It was a hell of a weekend if you're a
yeah.
Bitcoin hodler.
Oh yeah. So we'll get into that. And towards the bottom, we see some more coin stuff. We see coin there, AMC plug, some of the stuff we've been used to seeing on the gap up or gap down list one way or the other. A lot of the tech stuff all the way at the bottom, AMD on there. You have Tesla as well. So some of our favorites, Neo, hanging out all the way down here, down about 2 to 3% so far. So let's get to it, guys. Let's look at our gappers list this morning. Let's remove the stuff we have here on our list clean that up, and let's take a look here on our ACET. We'll start with that one. And as we look at ACET here, this is an 18 million shares float. Looking at the pre-market action right now, does not look all that great at the moment. They have 4.2 million shares trade. Actually, not 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 completely bad. They do have some activity here. They do got some volume. It's not completely bad. We can keep this on here and see if this can turn into anything. So we'll see.
That's a lower float biotech that released positive interim data on a clinical trial of a cancer treatment. So
Okay. Okay. All right. So they have a catalyst, which is nice at times. Sometimes these lower flow stocks do not have even that. Let's see if that create amounts to anything this morning. So good volume right now, up 40%. We'll put it on here as our low flow of the day so far. GCP at the moment, they're up 13.8, 274,000 shares traded, and they're uh yeah, not great on their daily here. I don't see anything good on this, so I'm gonna skip on it, guys. CYTH this morning, a low flow sitting at 5.5. Now, this one I don't like as much. You had a nice big initial pop here from 480 all the way up to 680, and now just kind of come back down here and just kind of hanging around 522. Again, just that doesn't look great at all for a low flow. I'd rather see something where you guys know you're kind of getting this movement, throughout the pre-market so far. CYTH is not showing that now. Can that change? Absolutely. If it does, we'll take a look at it again. DWAC here. DWAC, very, very volatile stock. We've seen this in play a couple of times in the last month or two. This morning, they're up 7.2, 761,000. I mean, they got some decent volume. They got a great activity in the pre-market. It's just the risk management on this one could get a little funky at times. So I'm going to put it as a possible. We can always remove it or push it up if it gets better. Here's Becky this morning. And again, not a fan of this one. I don't think it trades very well. Pre-market action is not showing us anything too exciting right now, and neither is the daily. So actually, the daily is showing us a little bit of a bounce. So I kind of like that there, but the pre-market is just not looking great. And we've seen how the stocks trades is not the best overall stock. PRTS, what is this? PRTS? No, PRTS is no good, guys. Am I missing candles here? No. It just looks very weird. That does not look attractive at all. BP is foreign, guys. It is up a nice 3.1 this morning. I see a lot of oil companies on here. CNTX is here. We have OLL here as well. Also looking, yeah, these are not looking great. All right, let's see what's gapping down, guys. Leading the way, one stock that has been very explosive for us, Lucid. Norm, Lucid's taking a bit of a big hit. What's the
They're
news
getting
on this one?
smoked this morning. They
Yeah.
were served a subpoena by the SEC on Friday, and it's not really clear what it's in regards to, but it has to do with their SPAC merger. So, yeah, it's a little ominous for some of these SPACs. See what happens there, and the SEC is going to be going after them for certain things. So whenever that happens, I've traded this morning. My day is I'm pretty much done with some of the and based on scalps on Lucid. Just be careful because it moves like crazy.
Yeah. There's definitely a good movement happening this morning on a very bad catalyst, which can cause some great reactions here. We got 7.4, guys, down 17%. This one is hot today. We have it on top of our list. Next is following. We got a bunch of Bitcoin stuff here. We have HUD. We have BitF. I'm not sure if STST is one of them. I don't think so. We have Riot. We have Mara. We have CAN. And I saw some other ones down here as well. We have Coin. I mean, it's a slew of Bitcoin stocks down this morning. And Norm, they're taking a hit over the weekend, you mentioned?
Yeah, Bitcoin trading was extremely volatile over the weekend. It's dropped like 30% from its high. What was that? 69,000, something like that, 67, 69, to where it is now at 48. In a 24-hour period, I believe it dropped about 17%. I think that was Saturday. We were sitting around having lunch Saturday afternoon. Andrew calls that brunch at 2:00. I don't know how that works. It's more like dinner, but anyway, especially when you're 2 hours behind. But anyway, yeah, Bitcoin has been quite volatile. There's been a rumor of margin call on some large player. I don't know if that's true or not. It's just talk, but that's out there. Might have helped the situation on its drop. So.
Yeah, see that here on the BTC charts again, just taking a bit of a hit over the last couple of hours. Yeah.
The other undercurrent going on is Chinese regulation issues, and you'll see a bunch of Chinese names in here too. Didi, obviously, as we've discussed the last week or so, is delisting so it can move to Hong Kong and appease the Chinese leaders. So throw some question in some of the other Chinese stocks that we watch now and then. So.
Absolutely. Guys, I like Riot. I like Mara. Typically the two kind of best trading ones. You can watch whatever you want on this one. If you like HUD, you keep that one on decks. Lower price, but you can see we got some movement this morning. But Riot and Mara tend to be the best trading ones for me, at least. So I'm going to put Mara on here. I'll put Riot. We can fine tune this a little bit later after we come back from announcements. So we'll put those two on there. And I'm going to head down to IonQ this morning. They're taking a hit. Is this a Chinese stock as well, IonQ? Or no? I forgot what this is.
Shit.
Yeah, is that what it is? It could be.
It's not Chinese. It shows up on our list, and I've never seen it trade well. I have not touched it. Maybe somebody else has.
Gotcha. Have no idea what this company is, guys. But look, it looks active today. We just don't like the way this thing trades. Let's head on down to MTTR. No volume, down quite a bit there. mRNA, what are we up to this morning? I think mRNA could be interesting, guys. We've seen some really good trading out of mRNA all last week. I mean, there was a ton of stuff that last week was amazing to look at. mRNA was one of them almost every day, alongside with the tech companies and everything else we had with the way the market was moving. I think mRNA seems to still be somewhat in play here, holding on to a nice level of possible support. We'll see if that's going to maintain there. GGPI this morning looking no good, guys. Very choppy. I'm going to head down because there's some favorite ones that we have down here. I'm going to look at AMC. AMC looks very good, guys. Very active this morning. I'm going to add that on there. 940,000 shares traded with a very nice pre-market activity. So that's good. Roblox, guys, for those that like this stock, this has been very active today. Not as great as we saw sometimes last week and the week before. In here, we had a couple of days moving very well. Today's pre-market action, not all that exciting, but Roblox is known not to put a great pre-market action and still trade somewhat decent for the type of stock that it is, right? So keep that in mind if you guys like that one. NVAX we don't like. What's another one? Plug. I know that's one that people are going to mention here. Very light on volume today, so I'm going to keep that one off. LGVN is not looking great. Here I want to get to NVIDIA. What's NVIDIA up to? Yes, NVIDIA is really good, guys. I like NVIDIA, and I'm going to look at probably AMD. And apologies if I took some of the stuff you guys were going to send over. But these two we've been watching all week. They look very good. Norm, anything you like on your end this morning?
I like Lucid. I traded it. Like I said, I'm probably done for the day unless I see something phenomenal. I'm cool with where I am right now. So,
yep, absolutely, man. Glad to hear that. Let's take it over to the room, guys. Let's see what we have going on here. RFG. Yes, NVIDIA is great. I have that on my list. Jared, Lucid. Yep, that Jared's in it too. He's taking some off there. So I wonder if it's short or long.
I believe he went long around 39.25 or somewhere in that range.
Yeah, he loved those bounces, man. I gotta tell you that he's great at that reversal, getting in right at a good entry, good risk to reward. Johnny, you're looking at Tesla. Let's see Tesla this morning. What we have going on here? Tesla right now, it is down 2.2. I mean, daily looks good actually. Daily looks really good. Yeah, we'll put it as a possible. You know what? I don't trade this one much or at all, but daily does look very good on this. All right, so Tesla is good. Alfredo, yeah, Tesla looks very good, guys. Very active. I like the daily a lot, actually. Here's Neo, also very active, guys. Down 2.2. Again, just keep in mind what's going on with all these Chinese company, guys. Be very, very careful. We're not saying you cannot trade them. Just be mindful of your size on this. And me, I wouldn't be overstaying my welcome too much on some of these stocks, right? So I'll be in and out very quickly. FCVI here, and I won't even think about holding anything overnight, guys. Very, very careful with that. FCVI this morning down up 21%. Horrible pre-market action though. Look how choppy this is with 9.9 million shares traded. The daily looks kind of scary, to be honest. What's the float on this? What's the float? Let's get the float on this thing here. CFVI 30. Okay. Yeah, I don't know, guys. I'm gonna stay away from this one. It doesn't look healthy at all, to be honest. So I'm gonna stay away from that one. Docu, that was on our gapping down list this morning. They had a great day on Friday, by the way. Traded very, very clean right at the open. We knew this thing was weak after gapping down. Sold off real, real nice here. That was one of my better trades on Friday. So that was amazing. Here is Docu this morning. They're down 2.5. Maybe a continuation, guys. Dacu is not the best type trading stock, but maybe a continuation today. So we'll see. Normally they don't trade very well, but the last 2 days have been pretty good for them. Microsoft, we'll take a look at two more, and then we'll pick off some from YouTube. Microsoft this morning. No, I like Nvidia and AMD better as far as tech companies goes. I mean, just look at the volume they're getting, just a little bit better. Nothing wrong with Microsoft, and they might pick up actually at the market open. As you can see, they've been moving with the overall market and the other type stocks. So look at their daily here on Microsoft. Look at Nvidia here. You're kind of getting the same movement that other companies are getting as well, right? We kind of got the little drop going on for the last couple of days. But outside of that, I like Nvidia and AMD much better. All right, we'll stop here. We'll take a few from YouTube this morning. What do you guys have today? Okay, well, Nokia. What's the
Don't
ticker for
even
Nokia?
pull it up.
What's the ticker? I want to show you guys.
NOK.
Okay. I mean, this stock, guys, is just brutal. I don't know how you would trade
Never.
this. This is it.
You wouldn't.
Yeah, it's
You
just
shouldn't.
you shouldn't
Don't.
touch this at all. It's really bad. So yeah, we're not gonna watch that one. Apple this morning. Let's take a look there. Apple is good. We got the stocks we've been watching here the last couple of days. Nvidia, AMD, Apple is one of them. I'm gonna put them on here. Actually, I'm gonna put them on my main list because I know I'm gonna take either Mara or Riot off this list. So I'll put Apple up here, 1.7 this morning, up 1.2. I love their daily. We've been talking about this daily having some real nice little bounce here, up to 165. Maybe try to get to some of these recent highs here. Apple looking very nice this morning. So yeah, Sonny, that's a good one. MT is usually foreign stock, so again doesn't trade very well, and this morning is just not looking good at all. PLTR, you got some decent volume here. Yeah, we'll take a second look at this. PLTR. And Apple we have already. Thank you for that. All right, we're all set, guys. I think we're good to go here. We'll come back towards the end and look at some other tickers if we have anything active that is not showing on this list here right now. But right now, already, guys, we have a very, very nice list. Look at the volume. Look at the tickers we have on here. Looking very, very good this morning. All right, guys, let's go over to our community events and announcements. We'll come back and fine tune this list. I'll let Norm take it away.
All right, guys. If you would go to the beginning. All right. Quick weekly rundown we do every Monday just to remind everybody of the schedule of events we have, usually on a weekly basis here at Bear Bull Traders. You've got Brian's swing trade discussion 2:30 in the afternoon on Mondays. He has been in Cabo. I don't know if he's back, so he might do that today. It might be a different day this week. Then Monday nights, 8 and 9 p.m. respectively, you've got onboarding with Carlos and then technology with Kyle. On Tuesdays for strategy, you've got trade reviews with Eamon at noon. You've also got those on Thursdays at noon with Eamon, and success webinars at 8 p.m. Psychology webinars Wednesday evening, 8 p.m. And then mentoring on Thursday. You've got Andrew's session at 11 a.m. You've got Ed with his after hours trading and mentorship at 4:30, and then Thor's group mentorship at 8 p.m. Eastern. Friday's crypto with Jared at 11 a.m. All right, for success webinars, tomorrow night, 8 p.m., you've got John talking about resetting your trading life. A lot of times there's ups and downs in trading. Sometimes you just got to reset, come back, and start fresh. So John will be talking about that. The next week, gap trading. Jared will be talking about gap trading. That's next Tuesday, 8 p.m. Eastern. For psychology this week, Wednesday, that should be 8 p.m. Eastern. Typo there, 8 p.m. Eastern. Dr. Kenneth Reed, Keys to Consistency, Part 2. And the correct time is on the next one, 5 p.m. for Creta. That's on the 15th, Tuesday the 15th next week. Should be talking about building resilience, how to bounce back quickly from mistakes and losses in your trading. Just a reminder, all Super Chat, Super Sticker revenues matched dollar for dollar by Andrew and going to Shriners Children's Hospital this month. If you have not checked it out, go to stocktradingsimulator.com. You can find the replay simulator that BBT has built and continues to improve. Also, don't forget to sign up with that newsletter where you get homework assignments from Eamon and Simon to help you get the most out of it, guide your trading, and learn from the simulator. You can put your email down in the bottom. We do not spam people, so you can feel comfortable doing that. If you're watching on YouTube and have not been in the chat, you can do so for a discount. Use the promo code premarket24. So when you go to bearbulltraders.com, on the homepage, you scroll down, you will see membership categories. Then you'll see that chart that has what all's included with each one. Just below it is that test drive button. Click on that. If you click on that and enter the promo code premarket24, you'll get a discount. It is 1 week. It will charge you one time. It is not a recurring payment. It will cancel after the 7 days. So give it a shot. We look forward to seeing you. Good morning, Creta. How are you?
Morning, Norman. Great, thanks. Hope you guys had a nice time at the meetup over the weekend.
It was a wonderful time. I don't know that I can do that very often. Andrew runs around like he's 20, and I don't have that energy anymore. So I'm happy to be home. I needed a break, but thank you. Sometime we're going to have a Europe meetup, and I hope to meet you there in person. So speaking of the meetup, I had a trader speaking to me, and this is a common problem I struggled with at periods in my trading, especially early on. And that is learning to accept or love losses, small losses, so that you don't get stuck in positions, hesitate, hold on to them, and let them go against you and incur large damage to your account. They asked me about this. I told them it's largely a psychological issue. I texted you over the weekend, and you said you were going to pick it up and address it today. So I'm looking forward to hearing what you have to say.
Awesome. So, well, thanks to the BBT member that brought that up, because it is a really common problem or issue. And it's something that definitely is coming from the psychology side of it. So let's just define what we're talking about. So in terms of not wanting to take small losses. So either that can be that someone actually is hesitating to even get into a trade because of the fear of loss, but that's a slightly different thing to what I'm going to focus on right now. So we're talking about now about when someone's in a trade and the trade's gone against them and they should be stopped out, but for whatever reason, they ignore their stops or they move their stops. And it's because they don't want to take a loss. So the loss is something that's pretty painful to them and they're trying to avoid it. And this is really common. And the problem is that sometimes you can do this and it will actually work in your favor. So sometimes you do it and the trade works out for you, and that then reinforces this behavior. But ultimately, if you're looking at it from a very cold, kind of strategic, rational, objective way, if you look at your stats over time, you'll know that if you continuously engage in that behavior, so either moving your stops or kind of staying in the trade too long, over time you will be at a loss. So had you stuck to your rules and stuck to your stops and your discipline, you would most likely be more profitable over the longer term. So it's something that traders have to actually learn to become comfortable with and to accept, is this idea of loss being part of the journey. And the problem is that usually if you don't take that small loss, at some point then that's going to evolve into a much larger loss. And then that sparks an avalanche or snowball of other behaviors. So it can lead into revenge trading and all of that. And that's where you can really start to incur bigger losses in your P&L. So what's behind it? Well, I'm going to talk about it from two perspectives. The first one I'm just going to talk about briefly because this is a more individual thing. So I'm just presenting this as an option for people to actually explore for yourself, ask yourself these questions, but I'm not going to dwell on it too much. So the first reason behind this is the kind of deepest subconscious level, where people sometimes have an association with loss that has nothing to do with trading. So if you've experienced painful losses in your life in whatever realm, or maybe it is that you've had some big losses in trading and it's left a bit of an emotional scar, but it could be loss in any other context in your life. If you've unprocessed emotions around that, then when you experience loss in the market, it's like a trigger. It's like pressing on a bruise. And so all of your feelings that are in you that are unprocessed to do with these other losses get triggered, and that creates an emotional response. So that can then lead to revenge trading or all of the other behaviors that take you further down the path away from your actual plan. So that's one piece of it. So without going into that in too much detail, ask yourself, what does loss mean to me? What does failure mean to me? And do I have any experiences from my past where I've had significant losses that still, resonate with me today that I haven't fully processed? So that's just one piece of it as an aside. But the piece I'm going to focus on now is the idea of loss and failure kind of from a societal perspective. Because actually, in order to succeed in anything, we need to get comfortable with the idea of failure and loss along the way. So if you think of a casino and how a casino operates, they have built in that they're going to lose money at different times. So you go on the slot machines and you're going to win at some point. And the casino has that built into their strategy because they know that overall they need people coming in the door. They need people to be reinforced to actually keep gambling. And so they build in a certain amount of loss into their strategy, but they know that overall, over time, they're going to win. And as a trader, it's kind of the same idea. Now, not gambling, but the same idea in terms of there will be losses and you need to be comfortable taking those small losses and understanding that they're part of you getting to your longer term goals. And just to frame this in a different perspective, so we'll look at some failures that significantly successful people have experienced. But I just want to say that society has a narrative that prizes the idea of success and achievement and hitting our goals, but it doesn't necessarily emphasize the journey that it takes to get there. So it doesn't emphasize, well, actually, you're going to have your face in the mud, 20 times on the journey to achieving your goals. So we just get programmed with this idea that success and achievement is, noble, and it's what we should be aspiring to, and that's what we see. But I'm just going to read this quote out so I don't get it wrong. But in terms of success, so Michael Jordan, famously successful basketball player, doesn't really need an introduction, but he has a quote, and I'm sure people have heard it, but I've missed more than 9,000 shots in my career. I've lost almost 300 games, 26 times. I've been trusted to take the winning game shot and missed. I've failed over and over again in my life, and that's why I succeed. So he's kind of highlighting that even he's at the epitome of, basketball fame, total legend of the game, but he's had failures and losses. But the important thing for him was that he always reset, and he understood it was part of the whole process. Another example is Jack Canfield. So he's an author of the book Chicken Soup for the Soul. And when he started, this is a massive franchise now, but when he started, he went to 144 different publishers, and it took him 14 months to even get success. And now it's an international brand with over 500 million books sold. So the idea is that you have to get comfortable losing in order to win long term. And it's your emotional reaction to loss that will trip you up. And so I'm going to ask people to try and detach from the societal standard of just focusing on success and understand that this is a mindset that will actually trip you up. It's false. So we hear it all the time on Instagram, everywhere, and we're reinforced with this message. But it's really helpful to understand that this message will actually keep you at average. If you buy into it, you will stay at average, because you need to be able to embrace loss in order to succeed. And so it's really important that you can start actually separating from this. And a good way to do this, or a helpful way that sometimes helps people make this a bit clearer, is to consider that there's two parts to yourself. So nearly like an angel and devil. And there's one part that is more linked with the ego that's going to keep reinforcing this message. And every time you have a loss, or you're having to accept that your trade has gone against you and you have to just cut your losses at the stop, then there's a part of you that is conditioned by society that's going to be saying, oh, you're a failure, oh, you've lost, this is wrong, and it will reinforce that message and try and get you to actually stay in the trade and avoid the short-term loss. But that is a mindset that's actually going to hold you back. So if you can put an image on that, view it as a character, give it a name, give it a voice, maybe like a cartoon voice, something that gives it a personality, so that you can recognize when this personality is appearing. And then think of the opposite side of that. So even let's say you're using, maybe it's an angel devil. That's just an easy one to say. So the devil is there telling you when you have to take a loss that this means that you're a failure. This means that you're XYZ. Actually detach from it by recognizing that that is an unhelpful voice that is trying to keep you stuck. And then try and connect with the other part of you. So in this case, the angel part of you that understands that success comes from being able to take small losses, accept them, reset, and move on. And I know that's a strange way to look at this. There's probably a lot of technical ways that you can approach this as well. But the key thing that I see that trips people up here is the significance that they give to the idea of loss and failure, and how they take that to mean something about them as a person. So if you can get really comfortable with the idea that this is a necessary part of the journey, that means that you'll be able to actually accept those small losses. And sure, you'll take the hit in the short term, but over the longer term perspective, you're not going to be triggered emotionally by each loss. Therefore, you're going to be able to stick to your plan better. And then over a month, you'll actually be hitting your profit targets. So it's really important to apply the right time perspective to this. So in a moment, yes, it might feel like failure or loss. But if you zoom out to the month perspective, where you've stuck to your trading plan for the month, you'll be profitable. Whereas in the other perspective, in the short term, you'll feel like you've won because maybe you ignored the stop and maybe the trade, turned around and you were profitable from it. But in the longer term perspective, you're definitely going to lose. So 2 things to remember, or 3. 1 is society's conditioning. You don't want to buy into it or you stay stuck at average. 2 is this idea of giving a personality to those two parts of you in order to enable you to detach a little bit and actually think about it before you react. And then 3 is just really recognizing this casino mindset that it's part of your overall strategy and you have to apply the right time perspective to what's happening in order to stick to that long-term strategy.
That is fantastic advice, and it's I hope they take it to heart, and I'm sure they will appreciate you going over that, Creda. I hope you have a great few days. I will see you on Wednesday.
See you Wednesday, Norm.
Take care. Just a reminder, guys, that Creda has her own watch list on BBT's YouTube channel. So we'll take that, cut it down a little bit, and it'll be available probably tomorrow, maybe Wednesday at the latest, in case you want to go back and check that out, or if you know somebody that might be able to use that and missed it.
Yep, absolutely, guys. Guys, hit that thumbs up over on YouTube. Appreciate it, Creda, very much, coming every Monday and Wednesday, giving us just amazing insights every time. All right, guys, let's take a look here what's happening. Right now, we have a pretty decent watch list. We have Lucid here, which has been extremely active the entire pre-market, guys. Some negative catalysts on this one, not doing so well this morning, as you can see. Just be careful with it. This thing can move quite a bit, especially at the market open. We've seen what this thing can do. Here's
you kind of got to trade Lucid like it's a low float. It's not, but yes, it acts like it sometimes. So
I could not agree with you anymore. My gap down list cleared up. My gap up. It's weird. But yeah, you do have to be very, very careful with that one, guys. Treat it like a low flow for sure. Here's Mara, guys. Mara, Riot, both in play. Bitcoin's having some action here. I think out of both of these, Mara and Riot, I think Riot looks a little bit cleaner today, guys. Yeah, I think I'm going to go with Riot. So I'm going to take Mara off. Not that Mara is bad. You can watch either one. Just want to reduce this a little bit here. I'm going to go with Riot. I do have mRNA here. I like the drop we're getting this morning. Very nice consistent flow here towards the bottom in the pre-market. 254,000. I like the daily as well. We'll keep that on here. AMC is very active today, guys. 1.1 million. NVIDIA is on here. Looking very good as well. Let me see. I got NVIDIA, AMD, and Apple. Let's drop one down. I think I'm gonna watch. I'm gonna keep Apple, AMD. Maybe AMD would drop. We'll drop NVIDIA. Let's bring NVIDIA down to a possible. Still a good one. Just want to reduce the number of tickers I have here on my main list. 1, 2, 3, 4, 5, 6. Perfect. And then secondary list, we have NVIDIA. We have DWAC on here, which is, again, this ticker, guys, I'm not a big fan of. That's why I have it here as a possible. I know they got some movement this morning. They're up 6%. Just be careful with that one. Tesla is definitely in play as well. We have NEO here, which also is in play. We have Docu, which it looks good on the daily for a possible continuation, and we have PLTR. So a couple of things on there that are looking all right this morning. All right, let's get to some levels, guys. I think we have a really good list on this top 6 right now. Lucid, low of the pre-market at the moment, sitting at 38.88. We'll slam a level right there. Below that, guys, we do have a nice level here after this beautiful ABCD pattern you're getting on the daily. So I like this level here, 33.91.
It's stuck to that pivot on November 10th where it dropped and started back. Yep, right there.
Yep, exactly. So I like that pre-market low right there being confirmed by this pivot here as well. So definitely like that as well. Below that, you have a level of support. You got a lot of touches on here as well, 36.06. Don't know if we're going to run that low today, but again, the catalyst is pretty bad. You never want to be getting looked at by the it's a SEC, you said?
Yeah, correct.
Yeah, so never want that. That's not a good sign. Towards the top, guys, plenty of levels, highs and lows from the last 2 trading days, previous day close. I did mark down this 43.13 here. There's a lot of support happening there as well. So we'll keep that on there. You can see here also you got a little bit of support in the pre-market already among some of these levels. So that's pretty good there. All right, heading down, we do have Riot this morning. Again, Bitcoin active. Towards the top, guys, plenty of levels, highs and lows, previous day close. Towards the bottom right now, low of the pre-market. You can see great area of support around that low of the pre-market at 24.89. You can see that right on there here back in early October. Tons of support happening there. Towards the top, I am going to mark down this area right on here as well. You got some support happening here at 26.43. So we'll mark that there as well. That seems to be an area where they consolidated quite a bit. Got the ping pong action happening here. between these two levels. So that's good. If we were to head back down and lose this 24, basically 25, we do have 23.99 right on here. So I'm going to mark that there as well. So, all right, Rye looking pretty good. You can also look at Mara, very similar action this morning. Here is mRNA. I like the daily on mRNA today. Again, you got some support happening right on here. We're trying to hold this. Let's see if that's going to stick. Low of the pre-market right now is 286.21. Again, it's not great compared to everything else that we're looking at. This is more of a possible, really, but I think it can do some good stuff there. Below this, we do have another level over at 277.86, so 277.86, and all the way down here also at around 266. So just a couple of spots in case we do flush any lower on this thing. We're already down 6.2. Volume is a little bit light right now, but that can pick up pretty aggressive with mRNA as we've seen. So that's pretty good there. Here is AMC this morning. So AMC right now, beautiful pre-market action. They got some good volume today, and their daily has been taking a bit of a hit, especially in the last 2 weeks. You can see this nice little drop we're getting there. And then if we look closely here, we got a lot of support happening here. The lows from the last 2 trading days are doing a pretty good job there. You can mark down the low of the pre-market at 26.50. So we'll mark that there. Outside, I think you're pretty much set towards the bottom. And then towards the top, guys, your high of the pre-market, pretty much where the previous day close is. And then you have the highs and lows from the last 2 trading days, over at 31. So looking good there on AMC right now. Here's AMD, which has been just explosive alongside with Apple and NVIDIA. And there's some other tech companies as well that you could look at. But these 3 have been really nice to keep an eye on. 139.37 is the low of the pre-market on AMD. Now we're getting a little bit of a nice bounce at the moment. Some good volume, guys, 824,000. High of the pre-market is sitting over at 145.47. So we'll put a level there as well. And then towards the top, just plenty of stuff there. Highs and lows and previous day close are taking care of you there. Above that, below the 139, if we were to come back down and lose that low of the pre-market, I don't see any major level. This is a good one on here. Again, it's pretty far down. Great area of resistance after a nice run. You can see the breakout at that 127.57. Here, this is a minor level, guys. Don't put too much weight on this. So 134.03. You only have 1 day really bouncing off of that. Again, just not a whole lot happening right here around for AMD around that below the low, below the pre-market low this morning. So here is Apple right now, almost 2 million shares traded, and I do love the daily on Apple. They're up 1.1. Low of the pre-market sitting all the way down here on this candle at 161.43. We'll slam a level there, but man, all eyes on this thing are looking for hopefully a breakout above 164, 165 into some of these recent highs, right? All-time highs sitting around 170.30ish around there. You do have a couple of days opening, closing right around here, 167.50. I think you're pretty much set as far as that. Highs and lows for the last 2 trading days are covering your pre-market high, your pre-market low, your previous day close. Just a whole lot of stuff happening here for Apple right now. So let's see where this breakout is going to take us. If it is going to break out, it could be a nice one towards the top here. It's got a great volume, 2 million shares traded so far this morning. All right, let's take a look at our moderators lineup, guys. That is the top 6 so far that I like on my list this morning. You got a couple else down here. NVIDIA actually looks very good as well. You can keep that on your list. DWAC looks a little on the riskier side, very unpredictable. Actually, I'm not going to be watching this one. I'm just going to remove it. Tesla, if you like that one, that is also in play. NIO is very active, guys. 2.6 million as well. Was in the green, in the red, and back in the green now. So you got a very nice range on this one this morning. Did we look at Lucid? Yes, we did take care of Lucid. The levels are set for that. DAQ, a possible continuation here if we continue to be weak. So that looks interesting. And then we have PLTR. They have great volume, but man, this stock could be so choppy. So that's why they're sitting there in the secondary list. Okay, let's take a look here. Our moderators lineup. As I am doing this, guys, please hit that thumbs up over on YouTube. We appreciate it very much. It does help out the channel a whole lot. So thank you for that. We're sitting right now at 147 likes. If we can get to 250, that would be greatly appreciated. So appreciate you guys, your support in trying to get us there to 250 likes this morning. Resize this over here. Let's bring this over so you guys can see our moderators lineup and we can see what everyone else is looking. I'm just going to stop the video so you guys don't get the mirror effect. And I'll bring this right over here. There we go. All right, starting with, let's scroll up. What do we have? Anybody up here? Nope, just a couple of announcements. And then we have Thor coming in with his list. Plenty of volume around. Yes, I agree 100%. And he likes this morning Apple, Neo, Lucid, NVIDIA, Baba, and the SPY. Again, just a whole lot going on there. We have some of these on our list already, except for Baba. So let's just take a quick look at Baba. What's going on with Baba there? Yeah, they're active, guys. They're up 2% right now. As you can see, great volume, 1.3 million shares traded out of the Chinese stocks. This is one that I actually like quite a bit. So we're going to add Baba on here this morning. Again, we'll see how these Chinese companies play out. They're taking a bit of a hit last week with everything going on and just some stocks getting delisted to go elsewhere. It's not a good sign. Jared is looking at AMC, Baba, Lucid. Dima is looking at Apple, Baba, AMD, Lucid as well. And BBT Scanners, which is Mike, is looking at Apple and AMD this morning. So both of those on our list as well, looking very nice. All right, guys, I think we're pretty much set here, as some of the moderators might be traveling still or just getting into their working station, so they might not have their watch list out just yet. But I think we have a decent list, Norm. Anything that we missed that might be exciting?
Docu.
Yeah, I have that one on as a possible.
Oh, you do? Okay. I didn't.
Yeah,
I didn't see it. I didn't realize
No,
somebody
but
called it out or anything.
It was great Friday, man. And
Yeah.
I think today it can be a nice one too, man. Normally,
I mean,
we don't
it's
watch
looking-
this one. Yeah.
Yeah, it's looking weak. I would just watch out at the open, see if they let some retail hop in and try to pop it up before they sell back into it or short into it. So we'll see.
Wait for that massive open to happen first, guys. We're sitting at 216, just a couple of more for 250, and we will be happy campers as we're doing this, guys. Remember, tonight we're having an onboarding class at 8 p.m. Eastern time. Do not miss that. You have a chance to sign up, and you get access for the entire week in our chat room. And you get access to both chat rooms, guys, not just the main one.
Yep.
You also get access to Ed's chat room, which is a small account chat room. That's what it's called. But he is an amazing trader. You guys are going to have a good time there.
Doesn't mean you have to have a small account to trade in there. And he's just really good at growing small accounts. That's why we've named it that, by the way.
Yeah, we don't want you guys to be confused.
But you know, I talked to Andrew about this the other day. It's been awesome to have Ed and Adam here, because a lot of people either, we all, right or wrong, whether everybody trades differently. Andrew trades so fast. And scalps, and some people either, especially when you're newer, it's hard for your mind to move that fast in the market. Ed moves slower, and he's very methodical about his trading, and you can sit there and if you hop over there, just a really good complementary style to what we have in this room. So
I agree 100%. And you said it best, Norm. When you're starting out, already everything looks like it's going 100 miles per hour with the time in sales, volume, level 2. It's a lot, guys. It's a lot. So trust me, the more time you spend with this, the easier it will become.
I like Jared's analogy here. He says Andrew's whitewater rafting, Ed is the lazy river.
Right. And they both could be very fun. So yeah, guys, absolutely. All right, how are we doing here on YouTube? Did we get our 250? 238. All right, guys, come on, let's get us there. We appreciate you guys very, very much. Outside of that, guys, thank you so much for joining the pre-market prep. Appreciate you guys very much over on YouTube. We will see you guys tonight, 8 a.m. for the onboarding class. If not, we will see you guys tomorrow.
Somebody's asking how they find us. Bearbulltraders.com. I put the URL down there. You can come over and check it out.
And you can use, if you want to do the onboarding class, do code premarket24. That's going to give you a $24 discount for $24 access for the entire week, guys. So again, a great deal there. All right, guys, thank you so much. Appreciate you guys. And did we hit it? I hope we did.
Yep, 282.
282, guys. You guys are the best. Thank you. See you guys tomorrow, 8 a.m. with Jared, Engineering the Market, guys. Trade safe.